Hello traders, you can follow me at Gumby9662C if you don't mind, and excuse me, my throat. Like the video if you like it, and put as many comments as you can at the bottom of the video. I appreciate all feedback. I think today was a game changer with the news that came out around 11 o'clock out of Trump. He is pushing back on infrastructure plans until 2018, which I thought it was completely unrealistic, the plans in the first place, because what he was going to do is have this major infrastructure this year. Whenever employment was at full employment, that was going to promote wage inflation across the country by spending government dollars, and that just was not smart. You do your infrastructure whenever unemployment is high. It didn't make one bit of sense to me in the first place anyway. But what this is going to do, it's going to devastate the steel stocks, the material stocks, the industrial stocks, and also the transport stocks, okay? And that's not even listed on here. So let me show you some of these charts. Okay, we're going to start with the materials index. We are breaking the trend right now. I think today was a game changer. Now is the time to start adding shorts to material stocks, in my opinion. This is a low risk, high reward setup. Okay, second, the steel industry. It has been on fire since the election back here. So I put my trend line from the election gap time frame. We came crashing down today. Look at this. We lost 3.45% in the index today. And Steel Dynamics, U.S. Steel, really got destroyed today. But I am positive we're going to come down and retest this trend line and most likely break this. I mean, but this is a low risk, high reward setup on your steel stocks. Your XLI, your industrials index, we were right at trend resistance going into today's news. We're coming crashing down already. I fully believe we're going to test the bottom of the triangle that we're in and most likely break down out of this trend. We've been in a massive uptrend in the transports, and we are, as of close right here, testing the uptrend line, and I do think we are going to come in tomorrow with the transports breaking down from the uptrend because of what's going on, and we're going to be testing the 50-day moving average sometime tomorrow. Okay, another area, the bank index. As I put in my weekend video, we are at the 9630 is the 161.8% fib level. So this is a resistance area, okay? So far, we're holding this. But we're already seeing, because the Trump effect is starting to unravel, because he's had two things now he's pushed back on timing. And the Dodd-Frank thing is going to be a lot harder to undo than what he's leading on here. So this is the next area which I'm thinking is going to show some significant weakness. So keep an eye on your BKX index, okay? Okay, another area of significant weakness today, that is your semiconductor index. First Solar came out, which is deemed a semiconductor, and we also had SPWR come out last week. The semiconductors are starting to show a little bit of weakness. Now we're still holding this up wedge, but this is a bearish wedge pattern, okay? I am looking for the semiconductors to roll out and bring the Qs with it, okay? And the NASDAQ. So just keep this in mind. I do think we're seeing a rollover in the semiconductors. Another transportation index. This one here is primarily weighted your airlines. We do have an uptrend here, so this one's not nearly as important as your railroads. But we are testing this uptrend line, so if the markets do get some weakness, you're going to see some weakness in the airlines too. For whatever reason, big money is still trying to prop up the markets with energy. But I do want to point out your XLE index is below the cloud. This is a bearish setup for your energy. So if it starts to fall this time around, it's likely to come down considerably lower than it has in the past. Your XLB, which is your materials index, is still looking pretty bullish here, but after today's news, this is one area that I am looking for a retest of the cloud here in relative short order, probably in the next week or so. Now, I don't want to be a perma bear on these markets. I told you the areas where I think are going to see some weakness, and there's reasons for the markets to sell off. But the healthcare is outperforming today, and it looks like it's trying to get up to this back to the all-time highs. So there is rotation into healthcare still, and that is a risk-on asset. And your consumer staples are catching a bid today, largely due to Philip Morris breaking all-time highs today. So keep in mind with this right here, this is a defensive area, suggesting money is rolling. There is money rolling into more defensive sectors at these high levels in the markets. Now, your consumer discretionary is a little concerning here. We did break out of this trend line, this accelerated uptrend. I mean, this is only the daily, and we do have plenty of room down to the clouds. So just keep that one in mind. There is quite a bit of room we can come down on our consumer discretionary. And the last real bearish chart that I want to show you, which is part of consumer discretionary, this is your retail area. It caught a pop a few days ago when Home Depot and Walmart reported, but it can't even with that good earnings numbers, it still cannot seem to get above the cloud. So this is quite a bearish take on as far as consumer discretionary and how individuals are spending their money. So that's just pretty much what I want to say. I have a bearish slant because I do think many of the indicators are way overbought here, and it's time to reset some of our indicators. So I just don't know how soon it's going to happen, like none of us do. But Trump delaying the infrastructure project, that is a major blow to the markets. Sometimes it takes a day or two for reality to finally set in. So that's all I got to say, and please leave all the comments you can. I appreciate it. Thanks.